Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 12th, 2010. Well, folks, an update on Wall Street today, probably one of the biggest updates we've had in quite some time. Early this week, we saw a little bit of a negative market, slightly flat to negative, and then yesterday we saw a small up move, and today a bigger up move. Now, there's a couple reasons for this. Number one, the dollar. The dollar has to be looked at as the first and foremost effect of this market. Take a look at the drop in the dollar. That drop in the dollar has just propped this market up so beautifully. It's as if it's a beautiful landscape ahead of you that, again, you just cannot turn away from. It's that good to the market when the dollar goes down. Now, a couple other things to note here. Volume is unbelievably light again. And this is a common theme. Really, for the last 2 months, volume has been so light. The reasons for light volume have been the holidays, obviously, and also the fact that the market has just not been able to fall. There's been no major events in Europe, in Asia, or even in the U.S. to trigger the volume selling that would come in based on institutional activity. Oftentimes, what you can look at here right now, and this is exactly what's going on, between the Fed's constant manipulation, which is, again, standard. That's just part of the game now. But again, you have deals between the Fed and the institutions to really hold off on selling, just allowing the market to be propped up. And again, this goes on behind the scenes. You don't hear about it in the media. I'm here telling you about it based on what I know. But nonetheless, again, little words, little kind of handshakes and winks going on behind the scenes. All right, guys, don't be selling too much here. In fact, hold off on selling. Let's get this market up higher. The institutions are happy to do it. They're in bed with the Fed. They're in bed with the government anyways. All right. Now, as the market again continues to hold up here, you are waiting on a couple different things. Number one, at 2 p.m. Eastern Time today, you have the Fed Beige Book. All right, the Fed Beige Book will be released at 2 p.m. Eastern Time. And again, that could cause a little bit of volatility and a little increase in volume because who knows what the Federal Reserve is going to say. Well, I guess we could kind of guess what they're going to say. It's going to be generally positive. But the question is, how does the dollar react? Does the dollar start to pop up or does the dollar drop? A move up in the dollar would create a little bit of a sell in the markets here. And again, we could see that. And you can see the markets are down, taking a little bit off the highs, but the volume is so light at this point. Don't expect much more than a pullback to the 20 moving average intraday. On a basis of levels, right now, the 128.72 high is the level you're watching. If you get through that, the 129 even number, and then ultimately the major level will be that 130 to 131. 128 on a pullback to that level will be some support. And right now, as of now anyways, we have support just about that level at the low of the day. If you look at the low of the day, it happens to be right at the 128 level. So again, that works out perfectly. That was an even number play, even number support right there. And again, we'll continue to watch it if we get some selling, which is very unlikely. Again, folks, I can't stress this enough. Everything that's going on, it's all pointing towards a neutral to positive market. And the only thing that can change that, and this is the only thing, is some sort of surprise event out of Europe or Asia or something major out of the U.S. that the Fed is not ready for or prepared for. If they're prepared for it, it will not happen. It will not have a major effect on the markets. Okay? Now, as we said, the dollar again continues to be in shape here. By the way, just take a look at the dollar. See how the dollar's upticked just a little bit over the last couple candles? And just notice how the spiders have just fallen just a little bit here. So see how the inverse relationship continues to hold. Now, I'm going to go into some different charts. We're first going to look at gold, which I find very fascinating. Gold has made a little bit of a move up here, but it's only on the flat line. You're only up 11 cents on the GLD, and the GLD was down until about 1 hour ago when it was hovering to the downside. And that's very important to recognize because, in general, when the dollar's as weak as it is, you'll usually see gold go up, and you're not seeing gold react. So that tells me that the daily bearish pattern here on the GLD could actually play out. And again, the key is that it has to stay below the 20 moving average right here. As long as the chart stays below there, you continue to look for a little bit of a play out to the downside on the GLD. The SLV, we can take a quick look at. Same general pattern here. You have a nice little downward move from last week, and then sideways bearish consolidation right into the 20 moving average, although it is starting to consolidate slightly in a bullish manner, but the bear flag still takes precedence unless you close above the 20 moving average. All right. Now, those are the charts there. The USO is having another solid day. We're nearing this little blue line resistance level at $39.35. That will be resistance in the short run. If it gets through that, look for the $40 even number on the USO. Oil, again, the pipeline in Alaska seems to be starting to pump again, but the weakness in the dollar is going to keep pressure on oil. Again, global expected demand is going to keep pressure to the upside on oil. All these factors are working to help prop oil up, and it's working so far. So, again, you had a little bit of a pullback last week right to the 50 moving average, which is technical support, and then look at it go right up after that, right back to those highs. And again, at this point, I'm probably waiting for 40 bucks on the USO to even think about a short at this point in time. All right, now a couple other things. Freeport McMoran here up only 50 cents, and that's kind of on par with what you'd expect. You have the markets up, which is good for Freeport, but gold is basically flat, which takes a little steam out of Freeport McMoran. In addition, you have a double top right up here, so that's your current resistance short term, anyways, on the charts. All right, so again, we'll watch and see how that plays out in the coming days. Chevron, big move on Chevron, piercing the double top here, trading at $92.70. A little bit above the double top, though it hasn't closed or it hasn't confirmed, so you can't be sure that it's going to be a breakout yet until you get confirmation on the daily chart, which would come tomorrow or the next day if we continue higher. Right now, Chevron's an extremely overbought chart. I mean, you can just see here. Look at the run it's had from 67 bucks going back to July, all the way now to 93 almost. Exxon's much the same. If you take a look at Exxon from 56 all the way up, those are amazing charts. You don't see charts like that very often in your lifetimes, folks, at least on stocks the size of Exxon and Chevron. You can always find a small cap that has a chart like that, but it's harder, much, much harder to find a stock that's literally one of the biggest stocks in the world, or companies in the world like Exxon, that has had such a move like that. And again, it does, crave a pullback correction, but we haven't seen the signals that have told us that that's going to happen yet. We're still watching very closely. We have certain signals that are pointing that way, but not enough to tell us that it's going to be underway in the near term, so we have to continue to look for those. When they come, obviously, we will pass it along to the research center. And by the way, folks, join that research center, get swing trades, get pro trader watch list alerts, get nightly videos, technical tactics, daily market reports. You get it all in the research center. And again, that's where you're going to find the key data, the key investment knowledge, advice, plays, and education that will make you into a pro. All right, nothing else out there has come close to it. And again, check it out. There's a free trial you can take. You can take it out, do the free trial, and see what it's all about, and then judge for yourself if you're making money, if you're learning enough to warrant the $49.99 small-time fee per month. All right. Goldman Sachs is up today, $2. That's on the back of JP Morgan. JP Morgan CEO came out yesterday or last night and basically said that most likely there will be a dividend hike in 2011. It looks like it will happen. And again, the stock on JPM up $1.02, which is a very nice move. However, you are into a double top, and short term, it looks like this has been mostly baked in at current levels. This is the double top up here. It hasn't even gotten there today. So at this point, that's your resistance at 45. We talked about this in the Research Center last week as being resistance at 45. And again, to expect resistance, and we did get the pullback as we expected. Now you're moving up to double top. That will be resistance again. All right, the play of the afternoon, folks. Keep an eye on this stock here, PCBCD. It's a small bank stock, low end of the chart. It did a reverse split. I've talked about this one before. I'm bringing it to your attention as I do more research on it. There was good insider buying in December, so the fact that insiders some insiders bought at $33. It was 33 cents, but it did a reverse 1,000 for one stock split, so that becomes $33. To see that, and the stock is trading below those insider buys in this type of market when JP Morgan's racing higher and all these other factors are so bullish, you have to figure it's cheap down here. Insiders most likely would not be buying if the stock was in trouble. So based on the chart, based on the good base being made, I expect a move up in the not too distant future on PCBCD is the symbol there. And again, the D will fall off. It just was added on based on the reverse stock split. It'll fall off in a week or two once that's done with and all taken care of. All right. So that's the afternoon play into the next few days for me. And we've talked about that via the Research Center and Intraday Stock Chat. IBM is having a big day. By the way, watch IBM. IBM to me becomes a short when it crosses $150. And again, I'll be watching for that and give the alert in the Research Center if I decide to do the short myself. Okay, let's go back to the SPY. Remember, things are somewhat on hold now for the Beige Book. The market's about 15 cents off the highs of the day. You can see it just came down, didn't even kiss the 50 moving average. The volume's too light. We've done 57.8 million at this point in time, which again, folks, I mean, you go back 6 months to midsummer even when things usually are the quietest, and we were doing 100 million by about this point, by about 1 o'clock. So to see 58 million or just under 58 million done, you know how light things are. People are just not participating in this market, especially the institutions. You have a little bit of black box trading going back and forth, keeping the market up and down a few pennies. But at this point, the institutions obviously are on hold, kind of waiting on hold, with the Federal Reserve keeping this market up as they see fit. All right, enough said here, folks. Have a wonderful afternoon. Join the Research Center. Join the Intraday Stock Chat. Come start learning and profiting with the pros.